Hi guys, this is Bifon and welcome to another episode. So in this episode, we're going to talk about candlesticks. So the last video we talked about candlesticks, how to identify candlestick and the names, how to name each specific candlestick. So in this video, we are talking about candlestick patterns. So as I hinted earlier, when these candlesticks form in a pattern is just a collective of one, two, or more candles, meaning giving us the same message. So those are patterns. So patterns are things that repeat each and every other time that you can study and backtest to see in your trading. So today we're going to talk about candlestick patterns and how you can use these patterns to trade. So let's dive in. So for our first candlestick pattern, we're going to talk about the bullish engulfing candle. So as I explained earlier, bullish just means the buyers are in control, and bearish means that the bears are in control. So for a bullish engulfing candle, this is a candle that shows momentum from the buyers. This shows that buyers are actually getting into the market. So this can be very vital in finding trades and finding exactly where to take your trades. So let me draw this. So take for an instant, the market is moving lower. So we have lows followed by, so for the sake of this video, I'll denote my bearish candles as red and my bullish candles as green. So the market is trending lower. So the market is trending lower. The market comes and forms something like this. So this is a bullish engulfing candle. So bullish engulfing candles form at a downtrend, and let me explain what they mean. So a bullish engulfing candle forms after price has been forming consequent lows and low structures, but bulls come and close above the previous candle. So for example, this is our candle. Price comes from the lows and closes above the highs. So this is a bullish engulfing candle. It shows bullish presence in the market. For another example, on the charts, so I think I'd love to show you this on the charts. So bullish engulfing candle simply means that, let me zoom in for you guys. This is a bullish engulfing candle right here. So the bears come in, but the candles open from the lows and close at the highs. They show that bulls are taking over the market, and as you can see, the market rallied up after the engulfing candle right here, rallied to the upside. So for our next example, For our next example, we'll cover the bearish engulfing candle. So the idea is just almost the same. Let me draw it out. So price is moving higher, forming candles moving higher. Then our first red candle appears. So red simply means that bears are taking control. So this is what is called an engulfing candle. Simply comes and closes below the previous low. So this is a bearish engulfing candle. Price comes higher, but this candle closes below, covers the body and the wick of the previous candle. This is a bearish engulfing candle. For an example on the charts, we have that example right here. This is a bearish engulfing candle. As you can see, as I've already indicated, they show a bearish presence in the market. So depending on how you're trading, this can be vital for finding entries into the market. So like they form right here, candle comes, closes above, this wick shoots all the way up and closes below the low. How do we know this signals a bearish presence? Because the market moves higher, but bears take control, driving the prices lower. So that is a bearish engulfing candle. To our next example, in the next example we're going to cover the evening and morning stars. So the evening star simply looks like this. So price moves higher. So this is the morning star we're covering. Price moves higher. Price moves lower, pardon. Forms an indecision. Indecision is characterized by a doji, after which bulls take control of the market. This will be very vital for your trading because these are one of the most common patterns you'll find in your trading. So they signify a bullish present in the market. So the price moves lower. Let me denote the wicks. Forms an indecision, after which bears take over with momentum. They form at a downtrend. Price is moving lower. Find support, then this forms. So this is very vital for finding entries. So for an explanation, for a brief explanation, price moves lower. This is an indecision, a doji. Doji shows indecision in the market, after which buyers take over and close above. So for an example on the charts, right here, As you can see, it is very simple to find these patterns because they occur each and every other trading day. So mastering these patterns is very vital to your trading because it will make it easier for you to see these setups, easier for you to know how to trade them, and easier to trade them. So that is our example. As you can see, it shows bullish presence in the market. So the candle closes right here, after which bulls take over, a retracement, and bulls actually taking over, flying up to the upside. So it shows a presence of bulls in the market. So to our example, to the opposite of that, which is the evening star. Evening stars form at the top of an uptrend. So this market is moving higher. Market moving higher forms an indecision at the top of an uptrend. So market moves higher, forms something like that. Let me do this. So, and the next candle is bearish. Bears take control soon after. So this is a bearish candle. Price comes, forms that pattern right there. So that is an evening star. Forms at the top of a trend, of an uptrend. So market moves higher, and that forms. So these patterns forming at a support or resistance zone make them even stronger. So always, this is a tip, always make sure you're looking out for this at major areas. So this signifies a bearish presence in the market. So for our next example, we cover the tweezer tops and tweezer bottoms. So first, let me identify and show you this on the charts. So the color does not matter. So as you can see, for example, the color of this indecision up here does not really matter. So bulls come, indecision forms, and bears take over. So this example right here, so as you can see, this is our perfect example. As you can see, I'm finding these examples very simply because the market, these patterns form each and every other trading day on each and every other time frame. So spotting and learning more about this and having the eye to spot them is very crucial for your trading, for your price action trading. So this example right here, bulls come, bears take over, indecision, after which bears take over. As you can see, price moves to the downside. This shows a bearish presence. To our final example, we'll cover the tweezer tops and tweezer bottoms. Tweezer tops and tweezer bottoms. So a tweezer top simply means price forming two identical candlesticks at either the top or the bottom of a trend. So for this example, we use the bearish example of it. Price comes, forms a doji or a shooting star, whatever candle you like. So basically you now understand what I'm talking about. So this comes from at the bottom of the trend, forms something like this. So mind you, this is the bottom of a trend, of a downtrend. Price comes and forms something like this. So this is a tweezer bottom. And for a bullish example, for a bearish example, so the market is coming down, finds support, forms this at support, then moves higher. For a bearish example, is just the opposite. The market comes from down here, finds resistance and reverses. Remember, the color does not matter. So in this lesson, I've showed you the basics and the most common candlestick patterns in the markets. So the more you trade, the more you get an eye for them. So first, backtest this information, spot this on the charts, and have an eye for them. So in the next video, I'm going to show you how to trade this information.